Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hour Show. What a day in the market today. We are wrapping up this week down for the week. Boy, oh boy, this is the second consecutive week of being down for the year. It's not looking too good. Not off to a great start. Stock market is very wishy-washy in its movements. If we get a rally, it's temporary. It doesn't last very long. So we're going to talk about a couple things today. We're going to do a deep dive on JPMorgan Chase and their earnings results. Also, Boston Beer, which is Sam Adams and so forth, they came out and lowered their expectations for fiscal year 21. So we're going to dive into that a little deeper and talk about what this could mean for the company, and could this potentially mean there is a turnaround about to happen on Boston Beer, its potential. So we're going to dive into that a little deeper, give you my overview of the market today and what happened and how we stand so far for the year. Also look at Bitcoin and Ethereum and see how they're doing today. All right. But the most important thing, remember, is what's on your mind. If you have a question, leave that ticker symbol and your question in the comments, and we will go over it live during the show. That's the most important thing to me, is I'm here to help answer your questions. That's it. I may have a few stocks to talk about, but that's just so I have something to talk about. The most important thing, though, is you. So just remember that. All right, I'm going to dive into it while you get your questions ready. So, one thing to remember. This is a long holiday weekend. The market is closed on Monday for Martin Luther King, the holiday. So the market is not open on Monday. So we'll get back to things on Tuesday with the market being open. Now, to sum up this week in just a few words, buyers lacked conviction. Buyers lacked conviction. That's how I would sum up this week. See, when we had the rally earlier or in the middle of the week, it didn't go very far, and it certainly didn't last. Here we are on Friday, and we're down for the week. So buyers lacked conviction. That's how I would sum up this week. Quite frankly, that's how I would sum up 2022 so far. You could also sum up 2022 with a growing divide in growth stocks versus value stocks. That's also a growing divide. The stock market did close this week lower as investors faded a half-hearted rebound during the middle of the week. The S&P 500 and the NASDAQ, they both declined 0.3% for this week. While the Dow Jones, it dropped 0.9% on the week, and the Russell 2000, 0.8%. Nearly 1% on the week for the Dow and the Russell 2000. Convictionless rallies. They just don't last. So real quick, before I dive into my opening monologue, in this current market, it is vital to know what the top stocks are in certain categories. Like, what are the top performing, the best top 10 value stocks? What are the top 10 growth stocks for when we get a convictionless rally? What are the top 10 dividend stocks? And I mean real yield leaders, where you could park your money in a volatile market and make a decent return. And what are the best momentum plays? Those are the lists that we have uploaded. That gives you 4 categories, 10 stocks in each, plus we throw in a bonus, several bonus stocks in each category. So it's over 40 high quality stocks ready to choose from that we constantly update. So you'll always have the best names available. If this sounds interesting to you, and it has been very valuable to me, then click the first link in the description or the link in the live chat to become a member and get instant access to our top 10 value, growth, dividend, and momentum stocks, and so much more. We've done the research, so you don't have to. Now, stocks did waver today after mixed earnings reports weighed on major banks. Economic data disappointed, and investors remained concerned about more aggressive Fed tightening. The Dow Jones, it lost 200 points, led by falls in big bank shares. The S&P 500 and the Russell 2000 were both up slightly, 0.1%, while the Nasdaq was the biggest outperformer among the other indices, adding as much as 0.6% after Netflix announced a price increase for US and Canadian subscribers. Not so great for people who subscribe to Netflix, but maybe a little better for shareholders. So if you're investing, and this is a great reason to invest in the companies that you use Netflix, invest in Netflix. When their price goes up, yeah, it costs you some in the pocketbook paying for that subscription, but you get to recoup some of that by investing in the company. On the corporate front, earnings from Jpmorgan Chase, and we're going to do a deep dive on them in just a moment, and Wells Fargo, they both beat estimates, but only because of reserve releases. And I'll talk about that too when we do the deep dive. And Citigroup, their profits dropped sharply. We talked about this earlier in the week when Jefferies reported on Friday. Jefferies has been a bellwether, a crystal ball, a gauge on how the big banks do. And Jefferies had some failures, unexpected failures. And that came through, and it still holds that Jefferies is a crystal ball on the big banks because JP Morgan didn't do that great. Meanwhile, both retail sales and industrial production, that unexpectedly fell, raising further concerns about the Omicron spread, supply chain disruptions, and high inflation. There is so much FUD in the market right now. Fear, uncertainty, and doubt. Both the Dow and S&P 500 extended losses for the second consecutive week. Meanwhile, the Nasdaq declined for a third straight week. The financial sector was down 1%. It was the second weakest performer in the S&P 500, behind the real estate sector, which was down 1.2%. The materials sector was down 0.8% and was restrained by a Q4 EPS warning from Sherwin-Williams, ticker symbol SHW. We can do a deep dive on them if you would like as well, which they cited raw material availability and labor headwinds for December that will continue through 2022. It was a bit shocking, and it was a dire warning that they put out. The energy sector, I've said this since day one, or day one for 2022. The energy sector will outperform this year. The energy sector was up 2.4%. It was very impressive amid another increase in crude oil prices, up to 83.87 a barrel. It was up 2.3% today, oil. The information technology sector was up 0.9%. Communications, 0.5%. Those were the sectors instrumental in the comeback amid relative strength in the mega caps. The mega caps did well. Flight to safety, Facebook was up. Google, Tesla, Microsoft, or I should say Alphabet, right? They were up. There was a sharp increase in the 10-year yield, which rose 6 basis points to 1.77%. Did not deter, though, the intraday rebound effect. The S&P 500 rose into the close, and that's how we got our gain today. It was hurting in the beginning. Here's where we stand year to date. Dow Jones is leading, down 1.2%. It's leading and it's down 1.2% year to date. The S&P 500 is down 2.2% year to date. The Russell 3000 is down 3.7% year to date. And the NASDAQ is the loser, down 4.8% year to date. All right, let's check in on crypto. Bitcoin is BTC USD on TradingView. There is a link in the account in the description for a free account to TradingView. Now on Bitcoin here, we have been watching closely this purple circle, which is the death cross, right? The death cross. Ooh. 2 days ago in the live stream, we talked about the death cross in great detail. So if you have some time, go back to that live stream, go through it, watch it. We even brought in Ally Financial as an example of what the death cross can look like outside of crypto. We also talked about the death cross that had already occurred in Bitcoin during the summer. And there seems to be some feelings or thoughts that what Bitcoin feels like right now is the same way it was acting back in July over the summer of 21 when it had the death cross during the summer. Death cross, to me, is a lagging indicator, meaning we've already been in a decline. We've already been declining. Then the death cross occurs, and by the time that happens, it is very possible you've already hit the bottom. You've already found the bottom by the time a death cross occurs. And then on the flip side of that, we did discuss a golden cross, which is the opposite of a death cross, and that's when you may have already peaked. So definitely check that if you have some time. It goes into great detail on the whole death cross, but just real quick recap. A death cross, it just means we've already been falling. We may have already hit the bottom, or the bottom is imminent. We're about to hit the bottom. That's what a death cross means. It looks like it's just starting to hit up and line up right now. But Bitcoin was up 1.75% as of right now today. So death cross, not so scary. Now, Bitcoin today did get as low as 41,752. But very importantly, it hit this trend line right here, this ascending trend line, and it bounced off of that trend line. That, to me, looks healthy. Because going back here to January the 7th, when it fell down to this trend line, the candle has been holding above every single day to close above the trend line and slowly working its way higher. We're at 43,350 right now. Not too bad. Now, Bitcoin has definitely underperformed the market this year. It's down 6.3% year to date. All right, let's look at Ethereum ETHUSD on TradingView. And we've got the same type of setup. They're following each other pretty remarkably. Ethereum is up 2.5% today at 33.24 right now. And it got as low as 31.88 today. Still, it has climbed above its trend line and it's holding above it. That's looking pretty healthy. The only issue with Ethereum, and there's no crosses incoming, there's no death cross or anything. It's running into its 200-day moving average and finding resistance there. That's the only issue I see with Ethereum at this moment on the chart. That 200-day moving average is resistant. All right, so Ethereum, it looks much healthier than Bitcoin does. It's not down to its bottom rung of its trend lines. It's up, still has one more down that it could go to, but it doesn't look like it. It looks healthy. It looks strong right here where it's at right now. So Ethereum looking better than Bitcoin, but Ethereum, surprisingly, Ethereum has been having bigger moves, bigger daily moves than Bitcoin. So Ethereum is actually down 9.6% year to date. So it's underperforming Bitcoin for the year so far, even though it's having bigger moves on a daily basis. Okay, let's get into JP Morgan and their earnings report. I really want to dive deep into this one and talk about it. So ticker symbol is JPM for JP Morgan Chase. Big bank, makes a lot of money, but can lose as well. If we look at their chart here today, down 6%, 6.1%. It's not very often that you see a big daily move like this on a big bank like JP Morgan. A lot of people see in 2022 a flight to safety to big banks. Me personally, regional banks are doing much, much better than the big banks are. And I'm all in on regional banks for 2022 to be a really good performer. But JP Morgan, it fell under its 200-day moving average today in this big 1 day over 6% fall. So earnings season is officially, it has begun. Every year or every quarter, the earnings season kicks off with the big banks. And that's the official start to earnings season. So earnings season has officially began and it is upon us now. The first batch of quarterly results from the banking industry have been released. Among these initial reports, we've got JPMorgan Chase, which that's who we're going to dive deep in on in just a couple of moments here. Ticker symbol JPM. Their results are always magnified as it's looked at as a bellwether, and their performance is widely viewed as a measuring stick for the overall financial sector and for the health of the broader economy. And on that note, a mixed picture has emerged for JP Morgan. And since it's a mixed picture for JP Morgan, it's a mixed picture for the financial sector and for the economy. The company once again exceeded EPS estimates, but it fell short on the top line for the first time since Q1 of 2020, a quarter that was severely impacted by the onset of the pandemic. On Here's the concern. The concern that I have for JP Morgan and their miss comes on the heels of Jeffries. Now, I talked about this on Wednesday. We did a deep dive on Jeffries. And I know a lot of people don't watch because I talk about boring stocks. Jeffries, it's not exciting, but it's important to understanding the market. It's important to understanding how JP Morgan was going to perform. Jeffrey's revenue fell short on Wednesday. And I actually do have a standalone video, so you can watch that without having to go through the entire live stream. But it indicated a Q4 slowdown, particularly in the trading business, which was broadly underestimated. This scenario, it may not bode well for the financial sector moving forward, including for Goldman Sachs, ticker symbol GS, and Morgan Stanley, ticker symbol MS, which are slated to report earnings on January the 18th and then the 19th. Even JP Morgan's EPS beat can be scrutinized, given that its earnings were bolstered by reserve release of $1.8 billion. If JP Morgan Chase did not release those reserves, they could have missed EPS. The upside of that release is that JP Morgan did not need those funds to cover anticipated losses from bad loans, but it does tarnish the quality of its upside EPS results. Repeatedly, higher compensations cost JP Morgan's adjusted expenses to shoot higher by 13% to $17.8 billion, leading to an 11% decline in adjusted EPS, year over year decline. But it's not all bad news. The investment banking business is still humming along, just like Jeffries reported on Wednesday, especially in the M&A advisory space. For the quarter, investment banking revenue increased by 28% year over year, fueled by an 86% surge in M&A fees. M&A is mergers and acquisitions. There's a lot of that going on right now. Smaller companies getting together, creating a medium-sized company. A lot of that is happening right now. A declaration in the IPO market late in Q4 likely caused investment banking revenue growth to taper from the 45% increase experienced in Q3. However, though, the slower growth isn't too concerning given that JP Morgan was lapping a very challenging year over year comparison. Investment banking revenues jumped 37% in Q4 of 2020. Now, in the consumer-facing business, the Omicron variant did little to slow down spending. Credit card sales, their volume, grew by 29% year over year. Additionally, the net charge-off rate remains very low at 1.28%, underscoring CEO Jamie Dimon's assertion that rising inflation, supply chain bottlenecks, and Omicron have not derailed the economy or the consumer. Across the company, average loans grew by a solid 6% year over year to a staggering $1.1 trillion with a T, even as corporations and households faced numerous macroeconomic uncertainties. These positive data points are being overshadowed by top line miss that appears to be mainly or a main function. And the real reason for this is a softening trading environment. People are not trading as much. Why? Because the market is in turmoil. The market has no conviction. So people are not as eager to get out there and trade. So what do you think that's going to do to a company like Robinhood? Interesting thought. Okay, moving on. JP Morgan's markets revenue, it dropped by 11% year over year to 5.3 billion, primarily driven by a 16% dive in fixed income markets revenue. This decline didn't come as a major surprise because we talked about this on Wednesday's live stream when we were doing our deep dive on Jefferies earnings. Jefferies fixed income, their trading plunged by 49% in Q4. Overall, JP Morgan's report had more holes in it than investors are accustomed to, with its revenue miss and sharp rise in expenses standing out as a big sore. Business is still quite healthy though, and Diamond's outlook for fiscal year 22 remains positive. But the once booming trading business has slowed down at a faster pace than anticipated, creating some concern for upcoming reports from others in the financial space. And that's why I brought up Robinhood. Because if trading is slowing down for a big investment bank like JP Morgan Chase, what does that look like for the smaller guys? All right, there's my thoughts and what I think about JP Morgan Chase right now. What do you think about JP Morgan Chase and their earnings? Do you think this mixed result is, like I said on Wednesday, maybe growth has peaked for now with trading? Something to think about. Okay, let's move now to Boston Beer. And the ticker symbol is SAM, SAM for Samuel Adams, uh, one of their brands. Look at this. This is messy. Really messy. And you would think a beer company, well, wouldn't a beer company be doing pretty good about this time? It's colder outside. People are inside more often, at least in the northern part of the US. But are people not drinking as much beer as they usually do? I mean, aren't Americans pretty high consumption? Don't they have a pretty high consumption when it comes to beer? Looking at this chart, it doesn't look like it, does it? But there is one very specific reason for this. And if we go back and look a little bit further back in history, there's this big rise, big rally, and a big drop off. There is one very specific reason that this happened on the chart. And it's not just on Boston Beer's chart either. Go look at Constellation Brands. All right, let's talk about Boston Beer because they did today come out and give us an update on fiscal year 22 and a preliminary update on fiscal year, I'm sorry, they gave us a full year 2021 projection and a preliminary outlook for 2022. So, Boston Beer, ticker symbol SAM, SAM, is truly getting slammed after revising its fiscal year 21 EPS sharply lower on a 1-2 punch featuring a deteriorating hard seltzer market and higher than expected supply chain costs. after withdrawing its fiscal year 21 earnings guidance in early September due to the hard seltzer market implosion, Boston Beer reintroduced a full year outlook when it reported Q3 results on October the 21st. Although Boston Beer's forecasted EPS of $2 to $6 a share was a far cry below the $18 to $20 projection provided in its Q2 report. The hope was that the worst of the downturn was in the rearview mirror. However, it is clearly not the case, as Boston Beer is now expecting fiscal year 21 EPS of a loss of $1 to a potential gain of $1. So, what happened? Well, looking back, fiscal year 21 started off with a bang for Boston Beer, thanks to a hard seltzer craze that launched sales of its Truly drinks through the roof. At the time, mobility was still relatively constrained, causing at home drinking consumption to rise. This was particularly beneficial for the up and coming hard seltzer category, which was rapidly gaining in popularity. Because of this, companies like Boston Beer and Constellation Brands, ticker symbol STZ, significantly ramped up production to meet demand, flooding shore shelves. I said that wrong. Flooding shore. Why am I getting tongue tied? Flooding store shelves with cases of an ever increasing variety of hard seltzer products. However, as people started to get out of their homes during late spring and summer timeframe of last year, the bottom quickly fell out of the market, leaving retailers and wholesalers with mountains of inventory. Apparently, the inventory situation has not completely resolved itself yet, causing Boston Beer to lower its fiscal year 21 shipment growth to 15 to 16%, and that was 18 to 22%. Beyond the unfavorable supply demand situation that's pounding Boston Beer's Truly brand, there are a few other items to consider too. On January the 6th, Constellation Brands issued a solid beat and raise report, suggesting that the hard seltzer headwinds had diminished, had disappeared, had been put behind them. Constellation Brands sells Corona branded hard seltzer products. What Boston Beer's downbeat fiscal year 21 guidance implies is that the market is either more oversaturated with Truly products and or demand for Truly has eroded at a more pronounced rate compared to Corona Seltzer's products. Furthermore, Constellation Brands took a $66 million obsolescence 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 a $66 million obsolescence charge in Q2 due to excess inventory in hard seltzers, pushing its beer segment operating margin lower by 530 basis points to 37.2%. In Q3, though, a much more muted impact from the inventory issue pushed its operating margin substantially higher to 41.3%. With Boston Beer cutting its fiscal year 21 gross margin guidance to 38 to 40% from its 40 to 42%, there's additional evidence that it's behind the curve related to Constellation Brands. On the positive side, Boston Beer did not change its fiscal 22 outlook. reaffirming its expectations for depletions in shipments percentage increases of between mid single digits and low double digits. Therefore, it seems that Q4 should be the last quarter that has a meaningful disruption to Boston beer by its hard seltzer meltdown. The main takeaway is that hard seltzer headwinds that many believed had already played out have come back to haunt Boston beer one more time. Maybe even for the last time, because it appears that Constellation Brands is 1/4 ahead of Boston beer in terms of moving past this setback. But the fact that Boston beer kept its fiscal year 22 outlook unchanged offers a silver lining, suggesting that the end of this headache is finally near. So, what do you think about this update report from Boston Beer and their outlook on finishing up 2021 and a more positive outlook for 2022? Let me know in the comments below. All right, those were the two brands that I wanted to do deep dives on. Next up, let's just talk real quick about a couple catalysts that are coming up this next week. And remember, the stock market is closed on Monday for the Martin Luther King holiday. Now, next week could be BTC USD Bitcoin. Next week has something very interesting in store for Bitcoin. Now, we look on the chart here and we can see this potential bottom already occurring. But next week, starting on Monday, there is a 3-day North American Bitcoin conference. And it begins in Miami, Florida, again on Monday. Now, a Bitcoin conference could have an impact on Bitcoin's price. Whenever there's good news for Bitcoin, that can obviously help spread awareness, attention, and get investors back involved in buying the coin. But remember what I just said about Jpmorgan Chase and what I said on Wednesday about Jefferies and those two companies' earnings. Investing is slowing down. Investing is slowing down. Will that mean that investors who are typically investing in stocks and bonds and other equities on that side, will they be involved with the crypto space? Are they more involved, less involved? What is the connection? Because if investing is slowing down, then that could mean, and let me just put the volume sticks back on here. If trading is slowing down in stocks, as seen in JPMorgan and Jefferies in both earnings, does that translate over to Bitcoin and other cryptocurrencies? It doesn't look like it right now. Going back to July, August of last year, When we hit the bottom, looking at the volume, it looks pretty consistent. Yeah, there is a lot of ups and downs and a lot of spikes, but if you look at, I know it's hard, you may not be able to see it on your screen, but there is an orange line running through these volume candles, and that's the average for that particular day. It's pretty level. Volume, average volume doesn't change too much. It looks like it's somewhere between 12 and 16 million. Looks to be about average. So maybe in the crypto market, trading volumes are not being affected as much. Maybe. That's something that we would need Coinbase and their earnings, I think, to really give us a real good guide on how is trading volume with crypto. So that conference, it starts on Monday. So watch for news this coming week on Bitcoin. Okay. Now in our Sunday evening Catalyst Watch video, most important video I do all week, there's a couple stocks that I'm looking at for a few different reasons. I'll be looking at Lucid Motors, Winnebago, Signet Jewelers, Plug Power, and Corsair Gaming. All in Sunday's Catalyst Watch video. Comes out every Sunday evening. So make sure you're subscribed so you catch that video. All right, we'll go ahead. It is Friday, the start of a 3-day weekend. We'll go ahead and wrap this stream up here. Make sure, though, to click that like button. If you like this video, if it's helpful, informative, actionable, click the like button. Then take this URL and share it wherever you can. And then third, click the first link in the description to get our top 10 value, growth, momentum, dividend stocks, and a few bonus ones as well. All right, ladies and gentlemen, thank you so very much for watching, and I'll see you in the next video.